Crude oil down from a near 10-month high today, as you saw earlier, after traders felt recent gains were unjustified speculations, it says here. Joining us, though, with their thoughts on where we go from here, John Kilduff, senior energy analyst at Man Financial. He is a CNBC contributor. Phil Dodge is energy analyst at Stanford Group. Good to see both. Thanks for joining us today. And we're playing that parlor game as we sit here at $72 or thereabouts. Where do we go next? 80 before 60 or the other way around? John, you say 80 first. Why?
I do say 80, Bill, because of just everything that's gotten us here to 73, as we saw this morning. The spike in interest rates recently confirms to me that the global economy is on track, demand is on track, and supplies continue to struggle, whether they're geopolitically related or not. We're having problems out there in the Middle East. Iraq and their southern output has been affected. Turkey's on a tripwire with 140,000 troops in northern Iraq, where there's a lot of oil. Iran, we talk about all the time. Venezuela, Russia. I mean, I could just go on and on.
Yeah, you're scaring the kids right now, John. Phil, you say 60 before 80. Why?
Bill, if I had to be pinned down to 60 or 80, I would pick 60. We talked about Nigeria before. The main reason that oil has gone into the 70s, in my opinion, is that Nigerian production has been shut in by sabotage, several 100,000 barrels a day. That has a disproportionate effect on gasoline because of the high gasoline yield. There is some chance now that the Nigerian production will be restored, and that will be the work of the new government, which came in on May 29th. And also, if oil prices stay in the 70s, when OPEC meets in September, I think they will decide to raise their production ceiling and maybe in the meantime put some more oil into the market. And just one final thing. Later this year, Saudi Arabia begins production in a new field called Qirsaniya, and that will add some significant supply to the market.
I don't know. It sounds pretty simple to me, John.
Well, Bill, I mean, I do agree. There was some hope for the Nigerian situation to settle down a bit, but a recent truce just ended. They, as a matter of fact, snatched up a couple of kids over the weekend. The separatist groups did down there. I don't see that situation necessarily being placated anytime soon, unfortunately. And again, I have real worries about the situation in Iraq deteriorating further on the oil production side. And I'm also disturbed by the continuing case that's being made by the U.S. military about Iran's involvement in Iraq. It's almost as if they're trying to make the case to have some kind of a military action of some kind against that country as well. So there's just so much trouble. There's so much investment dollars coming into the crude oil market. This recent rally has been highlighted by open interest increases, which confirms to me we still have higher to go.
And Phil, I mean, you've been following the market a long time. You're probably the first oil analyst I ever interviewed way back when.
A couple of years ago.
Aren't we at a point where the momentum is just going to carry oil higher anyway? The speculators are going to move it up there to begin with, to take us back to the highs of last summer?
Well, my proviso on not 80 would be that there wouldn't be a major geopolitical event like John was talking about. So I put that in as a footnote. But aside from that, I think supplies are increasing. U.S. oil inventories last week were up about 1 million barrels. So more oil is available into the market and coming into the United States. And at some point, that will cause the price to top out and carry the day and bring it back down.
And what about that, John? I mean, what role do you think the speculator does play in the market right now beyond the fundamentals? And if it is a significant enough role, when they stop, isn't that when we see the market peak at that point?
For sure, Bill. Is the greater fool theory at work right now? Potentially. It's incredible, and I have said this. We have as much oil in storage in the U.S. as we did back in 1998 right now when oil prices were down around $10 a barrel. So we're choking on oil supplies right now, and in that backdrop, it's incredible that we can achieve these heights. I make the argument, though, that oil has really become an asset class, a flight to safety for investors against terrorist attacks, against geopolitical worries around the world, much the same way the dollar, gold, the U.S. long bond have been historically.
Yeah, interesting. Good to see you again, both. Thanks. John, nice to see you.
Thank
Phil,
you.
always good to see you, my friend.
Thanks, Phil.